infographic, and then you can reserve your questions for Bongi. If you pick up anything on this infographic and then everything else that he has to speak about, you can just speak to him about it. All right, I'm gonna share now. Okay. All right, so this is week 4, buying property in SA while abroad. There's a short disclaimer there. Obviously, this is just for, legal reasons, so that tomorrow you don't come back and say, Karabo said 1, 2, 3. So I do research on these things, but I urge people to also do their own due diligence and also their own research, basically, before you get into any commitments. All right. Okay. So first we start here. Obviously, before you get into property, the first thing you need is finding an agent and try to avoid being scammed, and we are going to look at some ways where you can, or how you can find a trusted agent, basically. The most important thing here is to find somebody who's registered with a PPRA. So make sure that they do have a PPRA certificate and a number. I spoke to an agent this week. He said, yes, you're allowed to, as a client, you're allowed to ask for the number so that you can just check if the person, is verified. So PPRA is the Property Practitioners Regulatory Authority, if I'm not mistaken, but you can just quickly check on that. That just ensures that the person is registered, and you can hold them accountable, basically, should things go wrong along the way, So yeah, ask for the number. The third point, you can request the virtual tours, video walkthroughs, or live calls. So just so you know that whatever you buy, it actually exists, so you can ask the person, hey, can you go there? Let's do a video call and just see what you buy, basically. And then the fourth point is comparing the agents from different agencies. Okay, this goes without saying. Obviously, you just want to find the best person for the job and somebody who's experienced, right? So you want to do that. And then the last one is to confirm that this person has a physical or an office that you can verify. I think that's very important. Then we know where to find the person when you're overseas, So it's not easy, obviously, doing these things when you're abroad, but you want to make sure that some of these things are taken care of. All right, and then now we're looking at some red flags. First one is you never pay viewing fees or reservation fees up front. So this is basically somebody asking you to pay money to view a place, or to pay money to hold a property that you want to buy before you even sign the deal. You don't want to do that. That's a red flag, right? So don't be paying for things like those, and make sure that things are done accordingly. The second one would be verify that the seller's identity and property ownership is legit. You can do this via the deeds office. You can get them online. You can send them an email. You can call them as well, just to make sure that everything's above board. The third one is avoid deals that look too good to be true. We know this. A good thing with this is always a good way to go about it is always finding somebody or getting a second opinion, a third opinion on a deal that you think maybe might be too good to be true. We're not saying you can't be lucky, but when it comes to property, it's not that easy to get a deal that's just way, out of the ordinary. So always ask for a second opinion, third opinion, so. Okay, and then try to communicate only through official channels, company emails. That goes a long way. And then also the fifth one, that is make sure that all your payments are secured. So you don't use personal accounts, don't send people money on their personal accounts. So try to use company bank accounts, basically. All right, then we move on to the next one. Oh, sorry. All right, and this is the POA, using power of attorney. It's optional, but it's not mandatory, and we'll see why. So what is this POA, basically? So this lets somebody in SA sign property documents on your behalf. If you're not able to be, obviously most of us are overseas, and you don't want to do these things yourself. So you can assign somebody, you can assign a lawyer, a close family member, to also help you with this. You can give them the POA, the power of attorney, basically, to do these things on your behalf. Very important, make sure that you keep all the scanned digital copies of everything that is signed there. And yeah, the second one is why we don't need a POA. I've seen somebody, a close friend of mine, was doing this recently here in Beijing. So you can do this by yourself. If you can sign all the documents yourself at the South African embassy abroad, and you're also available for embassy appointments and document signings. I know a lot of people are far from the embassy, or like you just don't have the time to really do this. That's why you might need a POA. But if you can find time, then you might want to do this yourself. You can go to the embassy and communicate with that. It really goes a long way. And obviously, this is somebody who prefers to take full control and don't want anybody else signing for you. All right, that's basically the summary of a POA and how that works. You're welcome to do more research on that. And then the next one would be, oh yes, now it comes to the payment. So you got your property, everything else is legit, everything checks out. Now you want to pay your property off. Make sure that obviously use a licensed bank or forex intermediaries. No private transfers here. And also just obviously the basics, keep proof of funds, pay slips, statements, or any type of tax clearance certificates there. And also, they say always pay into the attorney's trust account, never the seller directly, so that there's like a way to go back and try and trace this whole thing. If you pay into the seller's account directly, that could lend you some problems, and there will be no way to prove that you were doing a deal with this person, really. And then always request a clear cost breakdown of whatever you're buying. This goes a long way, and they should give you everything: transfer duties, bond registration costs, attorney fees, and the deposit amounts, basically. All right, that's just the money part of it. And then the next thing would be, oh yeah, that's it from my side. And I will stop sharing from here, and I will hand it over to Bongi. Thank you, guys.
Hi, everyone.
Hi, evening, Bongi.
Hi, how are you doing?
All's good, man. All is well. All is well.
Yeah, no, thank you so much to you, Karabo, and Hazel as well for having me here, and together with the whole team, and especially with you guys being able to put together this presentation or these sessions that you are having each and every week. Okay.
Nice, fantastic.
Yeah, and thank you so much, Carol, for also the presentation. I think that it was a great one. It shows that you have actually done a lot of research, because I was also comparing the information that you have presented and the information that I also have on my side, and it looks like it's very similar, or if not, if not identical, right? So I think that what we're going to be sharing today, obviously, as you're seeing on your screen, it's a purchase assessment, of which is one of our services, all right, that we actually offer within our company called Overtlux Real Estate. Okay, but before maybe we get into this purchase assessment in terms of what it is and how it can help you, right? Because already now we are actually building up on some of the things that Karobe has shared in terms of how now we can take that information and start implementing it, right? So let me just give you a bit of background in terms of who I am, right? I'm a founder and a director of the company called Overtlux Real Estate. This company is a real estate agency, right? But it's not your typical real estate agency. So let me just show you here about our company. We are prouding ourselves for our professionalism, and also secondly, we are fully compliant. This is something that Karabo has also mentioned, that if you are looking into buying property or selling property, you need to be working with reputable companies or real estate agencies which are registered with the PPRA. So we are fully registered with the PPRA, and I was able to share the confirmation of such certificates with both Hazel and Karabo as well. So I am also, a fully also registered principal property practitioner, but besides being a principal property practitioner, I've worked as a legal consultant, having that legal background, because I also completed an LLB, which is a a legal qualification which which you need for you to become an attorney. So I've worked for a law firm where we're dealing also with conveyancing, which is that part of the property transaction where the property now is being transferred from the name of the seller to the name of the new buyer, right? So that's conveyancing. It's called, another word you could use, it's called property transfers, okay? So please let me know if I'm speaking a bit too fast. You're free to stop me and say, maybe I must maybe explain certain concepts there, right? So I was still telling you about about our company and also my background as well. So the legal background, also I've worked for other real estate agencies where I was working as a property practitioner. So that actually helps me and our company to be able to offer what I call a comprehensive property advisory, or when we advising you on your property transaction. So we're able to do this, advising you from the beginning of the transaction until the end of the transaction, right? And if I say beginning of the transaction, obviously the transaction normally begins when you're signing the OTP, which is the offer to purchase, right? And we were going to get into deeper details in terms of what all of those things they actually entail. Okay. Any questions you have at this point? Are we together so we can move on? I don't want to lose you as well. But yeah, so let's move on with this presentation. So what are we going to discuss today? Obviously, when we are talking about property investment or property transactions, there are different parties that are involved in this type of transactions. There's obviously the person who's selling the property and the person who's buying the property. So those obviously is the seller and the buyer. But on this kind of an offering here, we are only focusing on the buyers, right? And another word for a buyer, obviously, we know it's a purchaser, right? So in our offering, which is the purchaser assessment, we're able to sit down with you firstly to understand your property goals, and also we explain to you what it actually we've explained to you the property purchasing process. And that's the same thing that I've mentioned to you when I said, we are able to help you from the beginning of the transaction until the end of the transaction. Right. And obviously, I did mention that the transaction starts when you are signing the OTP. And I think that when we have enough time, I think that we are going to have enough time to actually go through each and every step that is involved in your property purchasing transaction. Also, we're going to be explaining our advisory approach. What is it that we actually do in terms to give you the advice that you need from the beginning until the end of the transaction. And when I say the end of the transaction, it's when now you have received the confirmation that you are now the owner of the property via a title deed that gets to be registered, at the deeds office. And I'm also proud to say that, within our company, we're also able to actually facilitate that process of also transferring the property into your name. Hence, we call it, the comprehensive property advisory. And lastly, also I'm going to be discussing with you in terms of how different we are as a real estate agency, and also how we protect your investment when you're buying property. Okay, so this is where actually we start, right, with this offering that I'm talking about, which is the purchaser assessment. The first step that we obviously take is to understand your property goals, right? So every one of us know, when we're buying property, we don't just buy property for the sake of just buying property, but we are buying property because we have goals and we have, objectives that we want to achieve. And so that's when we start to sit down with you to understand why you're buying the property. Are you buying the property for your family? Are you looking to make money via this property, which that would call it an investment property? Or are you looking for a property that you want to maybe end up retiring at, or you're looking for a holiday house? So all of those different, purposes of you buying property, we're able to discuss it with you. And that obviously will take into consideration the type of property. We have like townhouses, apartments, we have, full standing houses. We have houses within estates, and all of those different properties, they cater for different needs, right? And also the location, we always discuss that, because when it comes to buying property, the location, it's very important in terms of you securing your investment. And also, as part of our comprehensive package, right, then the second part of this one here, in terms of our focus, financial and legal readiness, right? This is so important because when you're buying property, you obviously you need money to buy the property. So where is that money going to come from? We are able to help you with that because we have also, partnered with the bond originators, right? These are is a reputable company that we have partnered with. Then we're able to do what we call an assessment in terms of how much you could qualify for if you're opting to buy the property via a loan, right? So obviously we know that there's two different ways in which you can finance your property. It's either you can buy cash, but unfortunately, it's not everyone that has, the potential of buying cash. So, but if you don't have the cash, we are able also to help you with sourcing the finance for you from all the major 4 banks in South Africa. And obviously, we also help you with all the process in terms of which documents you need to submit for us to actually get you the best interest rate from all the major 4 banks in South Africa, FNB, Nedbank, and all the other big banks, right? And also investment growth potential, we're also able to look into those. We're able to look into those. I think that I'm seeing some questions on the chat. I think that we'll go through the Q&A as well, especially maybe in the middle of the presentation or after the presentation. That is fine as long as the questions are being answered. So I was mentioning investment growth potential. This is for people who want to invest in property for the sake of making money. So, there you will need obviously some projections in terms of if you're buying this type of property, how are you going to buy it? Is it going to be via loan? Are you going to buy it cash? Or and how much you're going to start making per month? We could start making those projections, right? When you are investing into a rental income property. And also lastly, as part of the package, because we have a panel within our company where we're working with attorneys, we're working with conveyancers and also accountants. There, we can also bring in an expert of an accountant just to also deal with the tax and estate planning part of it, because we want to bring in actually people who are very competent. Actually, the accountants that we are dealing with mostly are also chartered accountants, registered with SAICA, and then fully competent to actually advise on such things. Okay. And then also, secondly, as part of our offering, as I said, we take you through the property purchase journey, right? So we are not just like a real estate agent who's just, advertising property and say, okay, come and buy this property, sign this offer to purchase, and we are done. No, we are there with you, as a trusted advisor, holding your hand along the way from the beginning, as I said, of the transaction until the end of the transaction. And beginning of the transaction, I've already mentioned, is that initial consultation, right? This initial consultation where we look at all the needs of all your needs and in terms of how you could meet all those needs, right? So pre-qualification, I've already spoke about this, right? And if you want to buy property via the bank loan, right? What I recommend and our company recommends that you must get what we call a pre-approval first before you could maybe apply for the actual loan, because the pre-approval actually shows you how much you could qualify for. It's not an actual application. And I think that a lot of people maybe don't understand the pre-approval. They think, oh, now I'm applying for a home loan. No, you're not applying for the home loan yet. This is a pre-approval to check how much you could qualify for based on your credit record, right? And your affordability, and also the current. And obviously when the bank is looking at this, it's going to look holistically at all your financial aspects, right? Your monthly expenses, how much you spend on food every month. They're going to ask you about all those things, right? And how much do you earn? And that's why the documents such as your proof of income and your bank statements, we're going to request them when we're doing this pre-qualification for you, right? It really makes things easy for you to know at least, oh, I'm qualifying for 1 million rand, or I qualify for 2 million rand, then I can now start looking for property which I think I can afford, right? So that's important. Number 2, property identification, right? We help you with the property identification, and I think this is very beautiful for people like you who are, overseas and they cannot, maybe view properties here in South Africa, or even they don't even have the time maybe to even browse the internet enough to get the property that they need. So we are able to do that with you. Actually, this is important for me to mention it, that we are doing it with you. Together we are shopping for the property, right? So let me just clarify this as well. We are a real estate agency, right? We have listed property also on Property 24 and other platforms where we are actually helping sellers to sell their property. So remember, we are a full boutique real estate agency where we also help sellers. We have sellers currently who are selling their property, and we are helping them to market their property. They are there online, right? But then when it comes to we're looking for these properties, right? There may be certain types of property that you're looking for that are not in our list or not in our stock. That is not a problem. That should not stop us from helping you. We work with other agents as well to actually shop for the property that you're looking for. And the great thing is, and I think that it needs to connect to that point 4, which is negotiation, right? We are also able to act through this offering, to act as your negotiators, right? Where we engage with the seller, we engage with other agents, and we also engage with the conveyancers, just to make sure that the whole transaction is actually smooth and seamless for you. Okay, so that's point number 2, property identification. So we're going to shop for the property together with you if the property is not on our list. So there's a number, hundreds and thousands of properties that are listed online all over the country. So the stock is just there. It just needs people who, who are ready and willing to actually buy the property that is suitable for them. So number 3, also, we offer to purchase review. Remember, I said we also, as a real estate agency, we have the expertise and the skills of conveyancing and conveyancing coordination. And when I say conveyancing, we mean the property transfer process. It's called conveyancing, right? So remember, I did mention again, the actual transaction starts when you sign the offer to purchase. So the offer to purchase it's actually a legally binding agreement, right? And another word for it, you could say it's a sale agreement. It is a sale agreement of the property, which now, yeah, I think there's a mic that is on. The property.
Yeah, so sorry, Bongi, I just muted Dots. Yeah, maybe she was not aware.
Yeah. All right. No problem. Thank you so much. So I was saying that, the transaction actually starts when the offer to purchase is signed. That's when now you know that I've legally bound myself into this transaction. The offer to purchase is a very important agreement, right? Because this agreement actually contains all the terms and conditions of the process of buying. And this, I mean, how much is the property? It's going to be on the offer to purchase. How much is the deposit? If there is a deposit, remember, a deposit, it's not compulsory, right? But there are benefits of why you could pay for a deposit. But if you don't afford a deposit, then you don't have to pay a deposit, right? So the deposit will be included in the offer to purchase when you can occupy the property. If you occupy the property before the property is registered in your name, how much you could pay, all of those things, it will also be included in the offer to purchase. But also importantly, the conveyancer, which is the attorney that is going to be attending to the transfer of the property, is going to be also included in the offer to purchase. So now, where do we come in when it comes to this offer to purchase? We're able to review or even draft an offer to purchase, which protects your interest, right? So I've heard, buyers in the past where they came to me and said, BK, look, I'm looking into buying into this property, and they've given me the offer to purchase, which is the OTP, but I'm not sure if I should go ahead and sign this document. Can you just look it up for me? Look at all the terms and conditions. Are they protecting me, or are they maybe throwing me under the bus? So I'm able to, because we have the expertise to actually, we understand offer to purchase, we can read the whole agreement and let you know these are the terms and conditions of the agreement, and these are the terms that are not in favor with you. We're able to amend those terms and conditions, or maybe even strike out some of the clauses there, and then present the agreement again to the seller and say, Mr. Seller, look, we understand this is the offer to purchase, but we don't think the offer to purchase is in favor of our client. And therefore, we have made these amendments. We have strike out this clause and this clause. If you are happy, can you please sign the amended offer to purchase? And if the seller is happy, they will sign the offer to purchase. If they are not happy, they will also make what we call a counter offer to say, okay, I'm not happy, but let's include this one, right? This type of clause and whatever. So that's what we call the offer to purchase review. We are reviewing it for you. This is so important because actually the seller is the one that appoints the conveyancer, right? Then the conveyancer is actually, I would say that they are actually acting on behalf of the seller because they are being employed, or actually, yeah, I would say employed. Let me just use the word employed now, but let me not employed, actually appointed by the seller, right? So here we are coming in to actually be your advisor, as the seller also has an advisor. It will be good for you to also have an advisor on your side. Transfer process, we recommend a trusted conveyancer to ensure a smooth transfer. As I said already, we have accountants on our panel. We also have conveyancers on our panel that are fully registered attorneys, fully registered conveyancers with the LPC, right? Karabo mentioned the PPRA, which is the Property Practitioners Regulatory Authority, right? Which regulates property practitioners, or what we call real estate agents, right? But when it comes to conveyancers and attorneys, they also are registered under the LPC. So all the conveyancers, we're not going to recommend a conveyancer which is a bogus conveyancer or a fake conveyancer. All of these people, they are registered. And the great thing about this is that, you could always check these things yourself on the website. If you go on the LPC website, you can check if an attorney is registered or not. So that's important to work with registered people, because all these government bodies, right, they actually have what I call a fidelity fund. So Property Practitioners Regulatory Authority has a fidelity fund. The LPC, which is a body that governs attorneys, has a fidelity fund. And this fidelity fund is for clients in case of maybe a loss, whether via it was negligent or it was intentional, that loss can be at least catered for if you apply to the fidelity fund, if you're dealing with a professional which is registered, right? So this is our advisory approach. I've already explained, I think, the first one, comprehensive offer to purchase review. We do that, and we draft and also negotiate sale agreements. This is what we do. When it comes to contracts, we can able to, even if you wanted to sell a house from scratch, if you want to sell a house, obviously you have to start with a sale agreement. So be able to draft a sale agreement. But obviously, if you are buying property, the sale agreement it comes in already drafted and ready. But before you sign it, we are able to look at it and advise you on that. Due diligence and property risk assessments, and this will be done obviously via the OTP, because as I said, the OTP contains all the terms and conditions. And sometimes contracts can be, sometimes we may not want to read the whole contract, or maybe lazy to read the whole contract. But it's good that you understand what you're putting your signature to, because if you're putting your signature on the dotted line, then you're binding yourself, and that it becomes a legal matter. So it's very important to look into these things closely and have someone who can advise you also. I just want to check, are you able to see my screen well on your side?
Yes, BK, your screen is clear. We follow your advisory approach. Yeah. Okay. And Hazel has a hand up. I'm sorry. I don't know if she wants to ask something now. No, I think I can answer the question. Yeah. Hazel, you can go ahead.
Hi, Bonginkosi. Thank you so much for having us here and also doing the whole presentation. I wanted to ask, this is a question that I've seen in the chats, and I had a similar situation when I went to South Africa in August as well, trying to finance a project that I had in mind. So on a case where let's say maybe your credit score is not the best, or rather, okay, let me just personalize this. When I left South Africa, I had just immediately finished university, had an issue where like it was a friend's birthday in university. I didn't have the money. I had to buy something for her. And then I went and opened a Rage account and then bought something there and completely forgot about it. And I had done that in my first year of university and then left, and then it had then been years. And then when I'm trying to, do grown up purchases, through financing through the bank, then that was where I was able to learn that, oh, okay, when I'm seeing my credit score is not the best, but I don't understand what debt do I have, and then I had to look it up. Then I'm able to see, oh, okay, it's that Rage credit that I had, and obviously it did me down. It did me so bad when it came to my credit score. So on that case, that being the scenario of what really is going on, and the case where of not having enough credit. Like I said, graduated, immediately left when I was 21. So on that case, how would one go about in inquiring? Also considering, I saw someone also asking this question, also considering the fact that when you do hard inquiries with the banks, it doesn't add on to any good thing. Like I did hard inquiries with like almost all the banks when I went back home, and that, if anything, decrease my credit score. So how do I navigate? How do I go about in doing that? And at that time, I also had like a lump sum of money, and I still got declined at the bank. So in that case, how would I go about, and what is the best strategy? And if you can also add on as well, like what is my credit score has increased, by the way, but I also saw someone asking this question. How would you then go about in working on your credit score while you're abroad? And considering that our pay slips, I think like most people are in kindergartens and they don't get pay slips, right? Even us who are at international schools, we also, like, our pay slips is encrypted and we can't get it. We can only just show something on our email where we receive, like it says that, oh, we've received this amount of money. So how does then one go about in providing proof to say, this is the amount of money that I have, these are the other expenses that I have, so this is my affordability?
Yeah. No, that's a very good question, and a good question, and a very important question, because I mean it comes back to what we spoke about, right? When you are buying property, the money to buy the property, it's important, right? If you are not buying cash, then you will need to actually request a loan from the bank. So to answer your question, Hazel, right? I think that you would need to really approach this credit score thing, right? It's important. You will really need to approach it like it's your bank account, just like how you treat your bank account, like your check account, right? We always check our accounts. I always check my account every day. I actually check my account. I want to see what transaction went off my account, what funds came into my account, what is my balance, why is my balance gone down, and I'm looking at all different transactions. So the first thing is to look at your credit record like it's your check account, right? So at least, and the great thing is that there are many, credit bureau companies that have offered online services, right, where you can be able to register, right, on these online platforms, and also be able to get your full report. And getting your full report, it's so important, right, because then you are able to see. And I understand, Hazel, you've mentioned that maybe you've opened an account, probably maybe you forgot about it, or you thought maybe you've paid it off, to only find out no, it was actually owing, maybe even if it was a little amount, but the fact that it's still showing that maybe you've missed a payment, that could still negatively affect you. So first, number one, as I mentioned, treat your credit score like it's just your bank account. Always check what's there. Are there any judgments that have been against you, right? And that it's important to check, because it might be there maybe by mistake, or it might be true, right? And the great thing is that with whatever you see on your credit record, right, you are able to dispute it via the credit bureau, right? And one of the biggest credit bureau, obviously, we have in South Africa, where almost everyone is registered on that credit bureau, Experian, right? You're able to dispute these things with them, all right? So that's the first thing you can do. And number two, this is important. Make sure that you don't miss payments, right? If you have accounts in South Africa, whether it's a credit card or it's a store, it's a store account, or whatever it is, maybe you have a car that you're financed in South Africa, at least number one, make sure that you don't miss the payment. You pay all your monthly repayments like as they are required. Because if you miss a payment, that is obviously recorded there on your credit bureau, right? And also, you don't want to have like judgments against you under your name, right? And if there is something like that which is under your name, you're also able to you know have it disputed if you feel like or if you think that it's there by mistake. So those are the things that you can do. Pay your payments on time. Don't miss payments. But also you don't want to over indent yourself. So also be conscious in terms of when you're taking credit. Are you taking this credit card because you really need it, or it's just you want to add on top of your debts, right? So being conscious of how you take debt, I would say this is one of the things that you could also do. But practicing that credit, I would say I'd call it a credit hygiene, where you are constantly checking on your credit record, seeing which payments am I missing? Am I paying my payments on time? Are there any accounts that I forgot? Maybe that, we have many accounts here in South Africa, like, Markham accounts, people open Markham account. You might have had a Markham account, or maybe a furniture store card at home that you forgot to pay for, right? You might have forgotten about that, but the credit bureau or the credit record, it will not forget, even if you're just owing like maybe 100 rand on that account. But the fact that it's been neglected for a long time, then it will affect you. So overall advice, practicing that credit hygiene. Hazel, I'm thinking I'll try to give you a comprehensive answer there. How's that? Are you happy with the answer?
Yeah, you did answer the first question that I had. Thank you so much on that. And the second question that I also had is that on a case where you're unable to provide proof that you are, like, obviously China is not affiliated in any way when it comes to like the finances or how other native countries are affiliated. If I'm being paid in the US, I can prove it in South Africa, you understand, because I can send money there directly. And here in China, the system is a little bit complicated and we have our way of doing things. So now, when it comes to proof, now I went to some bank and they said, okay, since there's another section in the whole payment thingy that I get on my email, we're unable to. I even had a translation. I had my I had everything. I even had information from the company. I went on to my boss and I asked for certain things from the company to prove that the company that I work for is a very big company. It's actually an international school. So can you guys, help me with A, B, and C? And it just, if anything, it just left a very bad record on the report, right? The credit report on Experian. So how does one now go about with doing inquiries? Because also it doesn't help in any way, because it's a hard inquiry, and when you get declined on a hard inquiry, then other creditors are not going to look at you. They won't even open up your profile. They'll just say, "Oh, you did a hard inquiry at FNB, did a hard inquiry with Standard Bank and all the other companies, the other banks." So if you're being declined by this bank, then we obviously cannot assist you in any way, So that's the second question. And just to add on, right, I'm gonna stop now. I'll let other people to ask, and then we'll just alternate like that. Another thing also, we also don't get approved for credit cards as well, because we don't have any credit record in South Africa. I'm talking about people who have like a similar situation when it comes, like a similar situation to mine. I even got, like, I showed them everything. I even went as far as showing them my investment portfolios. And I said, this is how much I have even out of South Africa. This is how much I have in South Africa. I can afford, and this is how much I have. I can even, after 1 month of you guys giving me the loan, I can pay this amount. I can pay the loan back in a year, I still got declined. There was no way of convincing them because of the fact that I don't have the record, any record of credit, and this bad credit obviously also doesn't do any good on my report as well. So in that case, how does one go about? I even went as far as being declined by Mr. Price. Even when I even took my Nedbank and my Capitec bank statements, and I was like, guys, this is how much I deposit per month. This is how much I've been depositing for the past 6 months. This is how much I send back home to other dependents that I have. Surely I can afford. And they still went on to declining me. Luckily, though, Woolworths was the only company that approved me, after a very long process of me convincing their operations manager at the company. And then that's how I got approved. And it has really drastically helped my credit score. But then on a case where someone is facing the same situation that I was facing when I had went back home with that record, the bad record, and also having the decline from the hard inquiries with all these big banks. How does where to from there? How does then now one navigate around? How do we then get to apply for financing a house, something that big?
Yeah. Thank you, Hazel, for your question there. I just have also some just follow-up questions for you. So you said you get declined for most of the applications for credit, but then the decline, when it comes back, it should give a reason to say, we're declining you because we think you can't afford, we're declining you because of this. And what was the reason? Did they give you a reason?
Because it doesn't show any proof, any record of me proving that I can pay. That was the reason.
Okay, meaning that you don't have a credit history.
I don't have any credit history. Even that one that I had paid off, it still needed time. I think like a month or 3 to clear off, because it's been from years. Yeah.
Oh yeah, I see. So I think also it can be a bit of a challenge depending on the person that we are talking about here. Obviously, we have people that maybe have left the country after they've built some kind of a credit history, and we have people that left the country when they didn't have any type of credit history. And I think that the second group of people are the ones that are actually experiencing all those issues. And I think also the decline really it doesn't really make sense to me, and especially if you have given them all the documents that they actually needed. All right. So with obviously to solve that credit history problem is to actually try by all means to get a credit provider that can actually can allow to give you some credit products, just like what you said. I mean, like Woolworths was the only credit provider that has given you credit, and I think that if you can just go on and search for other credit providers that can give you that credit, because that's the only way you can build up that credit history. But then when it comes to the actual home loans, were you also declined for a home loan as well?
Yes, I was.
You were for home loan as well.
Yes.
Yeah. Okay. No, that's a very big issue. All right. And someone is recommending there on the chat, I see credit card, and those are the things that obviously that you need to do. And my advice, obviously, it's limited here because it will always depend on that financial institution whether they can approve you for that credit or not. And for you to build up that credit history, it's obviously, as you've mentioned, to take up on all those. It doesn't have to be a big credit, just those credit card, even if it's a store credit like Markham or Rage, you take up on those kind of credit products, right? But also, I think that as people that are living abroad, but you are a South African citizen, I think that some of those people that leave the country, they sort of, maybe forget about their country and stop everything, and even when it comes to finances, and just focusing on the country where they at. And I think that also might be a bit of an error with some of the expats as well. But yeah, to answer your question there, the approval of the credit is dependent on the financial institution, but the solution for you is to keep on knocking on all different doors, right? I know African Bank is maybe kind of lenient when it comes to credit. You can try African Bank. You can also try some credit providers just to build that credit history. Okay, very important. Any some type of credit. Yeah, Garabo?
Yeah, BK, I just want to add to your point as well, like, and to, just answer Hazel, my personal experience, because a lot of people who work abroad, they go home and then they tell these places that they're trying to get credit from that they have jobs in China, which is not going to be, they can't really prove that. So you don't want to go there and say, I'm employed in China, right? It's you are on like a short-term contract, so it's not going to help you anyhow. So what my financial advisor once told me is like, basically go there and say you are a sole trader, basically, right? Where you don't have to register your company yourself, because I have a business at home. It's like you don't have to register on the CIPC, but you just still have to pay tax in a way. And that's how I got my car. So he wrote a bunch of stuff because there was money coming into my account, but if I'm working in China, there's no way to prove that what it is that I'm doing here, right? So he wrote that, okay, I have rooms in the township, I have mobile toilets, I have this and that and that, and that's how I got approval for the car. Another thing, obviously, people must do is like start like you said, these small accounts at home. You can buy like maybe a Vodacom Wi-Fi router for your family member, or whatever. Pay that off. Clothing account. Pay that off like a device, and they just keep paying these things off. And the most important thing is like, let's say you go back home now, you buy your siblings like clothes from like one of these clothing shops, for example. Quickly pay it off and then start a new one again. Don't keep adding to the debt in a way. So that builds your credit slowly, basically. That's just what happened with me personally. But if you have a business, you can go the sole trader way, where like there is no way to prove what you're doing, but you are like you trade basically. You can submit your 6-month bank statement, sorry, and yeah, if you know the right kind of people in those kind of like places, they will help you get around. I got a car, my car in 2020 with this method basically. So yeah.
Yeah. No, that makes sense. And obviously, you've mentioned good points there. I mean, building that credit history, even if it's smaller accounts. But let me just tell you, in terms of when we are helping you with getting a home loan, this is the documents that we're going to need from you. Obviously, a copy of your ID, copy of your work visa and passport. This we need when we are applying finance for our citizens that are living abroad, a copy of your employment contract, and 3 months latest pay slips. And I think that even if we can have this one electronically, if you're saying that you cannot obviously print them out, I think electronic copies can also work, and also 3 months bank statements into which your income is paid into, right? So even if you have like a bank statements from a foreign bank, which is a bank in China, for example, we could use also those statements, and we could take it from there to check for you whether you can get a pre-approval, right? As I said, it will be great to start with a pre-approval, because then it's not a hard application. It's just a pre-approval. So yeah. And I think that when we start now to do those pre-approvals, when you're ready, we'll tell you all the documents that we need, right? And we take it from there. If the bank will come back to us and tell us the reason of your decline. It will be maybe affordability, or if maybe your bank statements are not accepted, the bank will let us know that the statements are not affected. But we don't apply to one bank. We actually apply to all the 4 major banks. Yeah. So I think So. Hazel, are you kind of answered? Can we continue from here? I just want to feel what you think.
Yeah. It's all good. Thank you.
Yeah, it's all good. Thank you so much. Let us just now complete this, right? We said, what is our promise to you, right? As we have mentioned, we're representing you and not the seller. Remember, the seller has already like an appointed attorney, which is a conveyancer, who will be looking out for their interest. So we're coming in to actually look out for your interest via the review of the OTP, and also monitoring the transaction from the time it begins until it ends, right? So that's us, providing that clear advice, negotiate your interest, ensure that the transaction is compliant and there's legal protection as well. So that's our offering and our promise to you. And I think this most of the things that I have spoken about here in terms of how different we are. These are the things that I have mentioned. Okay, so if you would like to begin, right, with this kind of an offer, you just we can send you the proposal to give you even more deeper details in terms of what is the value that you get out of this consultation, and maybe complete a brief client information form where you're getting your information when you're really ready to begin, right? And thirdly, as well, then we will shop for the property together, sharing the property. You can share the property that you have found on your side. We also do share the properties that we have found on our side. You could say, BK, look, I found this 2-bedroom apartment. I think I like it. What do you think about it? I'll give you my advice in terms of where the location, the price of the property. So then when you maybe like it, I'll help you to organize viewing for you. Obviously you are abroad, we could use all the strategies that Karabo has mentioned, that live viewing of and also video viewing. I think that's obviously the only option. Or even if you want to have maybe a third party to actually give you a second opinion, maybe it's your relative that is here in South Africa, you could bring in that person to actually view also on your behalf, together with the video, just for you to make sure that you are making an informed decision, right? I think that so this is our contact details. Please, you can get in contact with us if you need advice on anything related to property. So I actually wanted also to share another part of the presentation, which speaks about, all the requirements that are needed from the part of the buyer. And I think those requirements also, we are able to go deeper into them when we are actually having the actual consultation, right? So I think that's now, let's give time for all the questions. I see there's a lot of questions here on the chat. So maybe Karabo or Hazel, you can help with the questions. Then I can answer all of the questions. Thank you so much.
Okay, thank you so much, BK. Thank you so much, man, for your time and putting this together. I see Itu's got a hand up. I'm sure she wants to ask. Yeah, Itu, go ahead.
Hi, thank you, BK. Please don't mind my voice. It's slowly coming back. So the first thing that I wanted to talk about is with regards to Hazel saying that she got declined with certain. So the last time when I was home in August, I went to FNB because I bank with FNB, and it's very weird. According to FNB, I've got a bad credit score, but when I look at I think it's Credit Score. That's the app that it's called Credit Score. With that, I'm in good standing. I even qualify for a 2 million house. So which one do we look into? That's number one. Number two, when I went to FNB because I wanted to improve my credit score, the lady there gave me a form. It's called Monthly Income and Expenditure. And what you then do is that when you're in China, because I use Bank of China, there's Bank of China in Santon, but unfortunately they don't print out statements. So you need to go to the bank that you're using in China to say, okay, as you can see, I'm a foreigner and I'm trying to buy property back home. So I need bank statements, because I asked for pay slips from my workplace, and they said the best place to go is to go to the bank that you're using in China to be like, can you please give me a bank statement that shows that this is the amount of money that I'm getting? And then after you do that, you go to a trusted translator with official Chinese stamps to get it translated. And then you take that to the bank, and then they put that together with this form with the monthly income and expenditure, and then you can apply for a credit card, or you can use that to show that you do actually have an income, and it's like a solid income. It's not like a fly-by-night type of thing. Okay. And then a question to you, BK, is because I've been also doing a lot of research with regards to buying property. There was a video that I saw, and they were saying that the minute you sign an offer to purchase, it means that now that house is yours. Even if you find flaws within the property, you can't now be like, I don't want to buy this house anymore because it's got 1, 2, 3. Are you able to protect me from that? Because, like, for example, the apartment that me and my partner are staying at in South Africa, thank goodness we did not buy. But we found out, because I wanted to buy one of the apartments to turn into an Airbnb. But then I found out that the company running that apartment, they are in debt. So they have not paid like electricity for some time. There are other things that they've not paid, because sometimes everybody else around us will have electricity and we don't have. So how do you protect me as your client from all of these things, like to make a very good purchase?
Yeah, no, that's a very good question. Very good question. And that's what we do, right? To safeguard your transaction. Hence the OTP is very important because it's the document which initiates the transaction, right? And the OTP will have all the terms and conditions. As I've mentioned, it will be about the price, and also it will have an important clause there, which is called the footnote clause, right? And that footnote clause, it says that, and on standard OTP, you always find this footnote clause, right? It says that you are now buying the property as it is, right? So hence, you also need to view, right? So they give you an opportunity to view, and after you've viewed, you're saying, okay, I like the property, I'm ready to sign, right? But if you didn't read the contract properly, it has the clause to say that you are now buying the property as it is, right? When the property now gets transferred to your name and now you have a title deed, you cannot now go back to the seller and say, look, the geyser is not working, you should fix it. No, you are going to fix the geyser because you just bought the property, right? But then what can be done, right, is that before you sign, we can make sure that the terms and conditions of the contract actually are in your favor, right? And one thing that we do to actually safeguard obviously your investment, let's start maybe firstly with what you said. You're buying into a complex or an estate where there's a block of flats, you want to buy in there. So our duty as well will be to also, contact the body corporate, because the body corporate is the one that actually, I would say, it manages the complex to get the financial statements and also to do a bit of a due diligence in terms of their finances, to give you some sort of an indication to tell you, okay, they are in a good financial standing or not, right? That's the one part about buying in an estate where you want to check the financial health of that body corporate. Some body corporates are, they are owing Eskom. Maybe they are owing Eskom maybe 1 million rand or 10 million rand to Eskom. And Eskom can really switch off the lights at any time. And I've seen Eskom doing this, normally I think you've heard stories like that. Eskom is actually, cutting electricity from a government billing. So those things happen. So that's what we do, checking maybe the financial viability of that complex. But number two, when it comes to the OTP, as I said, right, before you sign it, you can change the terms of the terms and conditions of the OTP. The danger comes in where now you are just going ahead to sign without reading what you are saying. But also, let us remember something, right? When it comes to an OTP, the OTP will also have what we call a suspensive condition, right? They call it a suspensive condition because they're saying that if this term and condition is not fulfilled, right, the contract will not be binding, even if you have signed it. Let me just repeat again. The suspensive condition says that if this condition is not fulfilled, then the contract will not be enforceable. And that clause or that term and condition, it's about the approval of the bond, right? So you as a buyer, you are saying that I am buying this property and I want to buy it via applying for a loan, right? If you don't get approved for the loan, then the OTP does not become enforceable. But if you get approved for the loan, the OTP will become enforceable and the property will become yours at the end when you get an OTP, a title deed, and you're going to buy it as it is. And let me tell you how we protect you from the foot clause, right? We always have to include in the OTP to say that, you know what, we can even involve a professional inspector to inspect the property. Obviously, also when it comes to the electricity and the plumbing as well, we can also include a clause there that says that we want a professional plumber to check on the plumbing before we sign the OTP, for example, or to have a professional. Actually, the professional electrician, it's some kind of a standard to have in the OTP to say that the electricity must be checked and you must give me a compliance certificate by an approved and qualified electrician. So that in the OTP will ensure that those things are done. Yeah, and I hope that I answered your question. How are you answered?
Very much so. But then now, when it comes to credit score, do I consider FNB or do I? Garabo helped me here to say clear score.
Yeah.
Clear score says I'm great, but FNB says I'm bad. So now, how do I maneuver that? Because at the end of the day, it's not clear score that's going to give me the home loan. It's FNB that's going to give me the loan.
Yeah, so that's a very important question as well, right? So we have different credit bureaus, right? Some of them, they're small, some of them, they're big, but one of the biggest is Experian, right? So I would say start with Experian. Make sure that your credit record is good with Experian, right?
Okay.
But also, after Experian, we have all these different banks, right? They also have their, I would say, some sort of an in-house credit bureau because they are a financial service and they also credit provider. So they have within it some sort of a credit bureau. And these credit bureaus, it seems like they don't get updated like promptly. So I know with FNB, I think they are suffering with that. And I've worked with them as well. I've worked for them as well. I think they are kind of slow when it comes to updating the information which is available on their credit record. So it's your duty now to actually dispute some of these things. If you feel like, okay, they are saying there's an account which is open, it's showing active, and you've finished this account like 1 year ago, why is it still showing active there? If it's closed, make sure that they get it closed. So let me give you something as well with FNB. FNB has an in-house kind of a credit bureau, right? Called I just forgot the name of the credit bureau, but I'll put it on the chat there when I remember. So dispute anything that you dispute anything that you think it should not be there, because as I said, some banks are slow with updating their credit bureau. Yeah.
Okay. Because I don't have, last comment. Sorry, everybody. I don't have any debt to myself. I've paid off everything. So I don't get like why. Why should FNB say no when I've, All right. Yeah. Thank you, BK. You've answered me perfectly. And I will look out for the chat for when you remember the name of the in-house.
Yeah. That, but also to add on that, it as I said, you must also demand a reason why they also decline you, so that you can know how to improve it, right? So a credit record can always be improved by taking the right steps. So thanks there.
Okay. Thank you.
You're welcome. Grabo, what should we do? Should we do you can guide me or you help me with the questions on the chat, or you can give people to ask.
Dot has asked something here in the chat.
Someone is asking, can you talk about the process of buying with cash?
Guys, ignore that. That's AI something. So ignore AI to me.
I'm wondering what kind of name is this? This AI. I'm like, okay.
Yeah.
I want to answer AI now.
Okay.
After that, we have a Dot. She says, what are the available remedies when the property you bought gets attached to the late estate and there's a pending dispute? At the time of the conclusion of the sale contract, the seller was alive. It's quite hectic there. I don't know.
Yeah, no, this is quite hectic. Let me read this. So what are the available remedies where the property you've bought gets attached to the late estate and there's a pending dispute at the time of the conclusion of the sale the contract was alive. Okay, so I think the main question to ask here, you said that, okay, you are saying that available remedies for the property you've bought, right? If you're saying that you've bought a property, that's the first thing that we should look at. What do you mean bought? So you have signed a sale agreement, right? Which is binding, okay? And when did the seller die? At which level? Did they die before you received the you received the title deed? You can just maybe, Dot, can you just clarify for that? At what stage did the seller die? Because the transaction was alive and it was enforceable through the sale agreement. And if the conveyancers are also already, if the conveyancers are already on the process and they are registering the property, the transaction will not stop because the seller has died. What will happen is that the property will become part of the estate of the deceased, right? And then when the property becomes part of the deceased, then the estate will be dealt in according to the law, right? And when we say according to the law, it will, okay, I think that maybe I'm confusing your question, right? So I think the answer to this one, right, the transaction should continue. Let me not confuse you. The transaction should continue if the conveyancers are already on it, right? So when you're saying a dispute, who's disputing this? Yeah, who's disputing it? Is this the beneficiaries or the children of the deceased? They're saying that the house belongs to them because now, as I said, if someone dies, obviously the estate will be dealt according to the law. It's either they had a will or they didn't have a will, right? Whether a will or not, the estate of the deceased will will be dealt with, meaning sharing with the beneficiaries. But with the property, if the transaction was already in there and the money was paid, the transaction should continue. I don't see why it should stop because the seller died. Yeah.
Okay, thank you, BK. I'm sure Dot heard all of that. If she wants to follow up, maybe she would just.
Yeah. Yeah.
So maybe if I'm
Sorry,
this
sorry, Dot.
the contract was concluded office where will be, but say it again.
Yeah, sorry, Dot, you were breaking there. We couldn't hear you clearly. Can you try that again?
My order.
BK, can you hear? Or is this me?
No, I couldn't hear whatever.
Contract transfer.
I think she can write on the chat. It's not clear.
Yeah. Sorry, Dot. Not very clear. Hey, as soon as you start talking, we can't really hear at all.
Have no way.
Yeah, it's not clear.
Yeah. Sorry, Dot. You can write on the thing on the chat. Yeah.
Have.
Okay. BK, I was asked to ask you about buying in cash. What's the process of buying in cash?
Yeah. Buying in cash. And I think buying in cash is really one of the quickest and the easiest, and you'll be able to get your title deed if you're buying cash quickly than anyone who's buying via a loan, because we don't have to wait for any bond approval from the bank. Then obviously what we need, if real estate agents, the ones that have listed the property, obviously they will need FICA documents from you, right? Including your identification documents, proof of address, but also we need the proof of funds, right? So the proof of funds would be a bank guarantee from where the cash is, right? No. So we don't look. Oh, Collie is asking you a question there. I see. So we don't look at your credit score because you're buying cash. We need a bank guarantee, just a letter, or maybe even sometimes a statement showing the balance which you have at the bank, just to say on the bank letterhead, this is how much I have. Then again, what Karabo has said, right? You don't pay such big amounts of money to the agent, right? Or you don't pay such big amounts to anyone who's requesting this. It has to be paid always to the conveyancers, because the conveyancers have a trust account where they put clients' money, right? And very important when you are sending money to a conveyancer's trust account, or maybe an attorney's trust account, right? They are supposed to put in your money in an investment account, that not just keep it there. Your money, once they have it there, every day it should at least get some interest, right? Until they pay it over to the seller, right? Because the money will be at the conveyancer's trust account and will only be paid to the seller at the date of lodging your, not even the date of lodging, actually the date of registration. That is the date when you get your title deed. That's when the money will be paid over to the seller. So yeah, it's a very quick quick transaction when it's cash. But obviously, as real estate agents and attorneys and conveyancers, we are all applicable to FICA, right? FICA is the one that is the law that tries to govern, money laundering and financial crimes. If you are buying cash, we might be required to maybe report, not to report to say that, oh, someone is doing, no, it's a standard requirement from FICA to say that we must know the source of funds. Maybe on your side as well, you should be ready to just give us a reason in terms of where is the money coming from. If you've earned it from a salary, that's also okay. It's my salary I've been saving for the last maybe 2 years, right? That's also fine. So that's the process of buying cash.
Okay, thank you, BK. We can take Mabo and Claire and then Hazel after that. So yeah, Mabo and Claire, you can ask a question. I think she's gone now. Oh, okay. I think Mabo and Claire is not here anymore. So let's go.
Can you hear me? Sorry. Hi.
Oh, hi.
Hi.
I was trying to unmute, sorry. Okay. I don't know if it's two or one question, right? So my question is regarding a commercial building. I don't know if it's a commercial building or commercial space, right? Mm-hmm. So when it comes to tapping into that type of market, do you follow the same process as when you're buying other properties where there's like maybe it's an NBAB or whatever, right? Like, do you follow the same process when you go to the bank? Do they also like have ways where where they check? I don't know how to put this question, but yeah, I hope you get it. But yeah, is the process the same? That's my question. I'm sorry.
Yeah, no, the process would be different if you are buying a commercial property, because now it's I would say that you are kind of buying a business, right? So you are buying this property for the sake of making money through it, right? So on your side, as the buyer, there's a lot of due diligence that you have to do, right? You want to buy a property that is going to, start making money for you. And it will be great if you start making money from day one, right? I'm not saying that it's always possible to make money from day one, but if you're buying it as an investment, it will be great for you to start making money from day one, right? So it will be a whole calculation that you would need to do, right, on your side as the buyer, of which the bank will also do, because if you're buying the commercial property via the bank has to do a valuation on that investment property, right? So they will call in their own professional valuator to look at the commercial building and with all the if maybe there are equipments in that commercial building. For example, there are commercial properties where it's like a industrial property where there's machinery and some equipments in that one. So the bank will look holistically into that property to find out if the money that you're asking for is really worth the property. So that's step number one. And I think on your side also as the buyer would have to calculate in terms of what's the potential profit that you could make, either from day one or after some time. Yeah. yeah, I think the due diligence, obviously, which is done on the commercial property, is I think it's more stricter and more deeper as well, because we need to look at the potential rental income, right? And obviously, when you're looking at this potential income, you would have to do that research. Obviously, it's a research about the area in which you are buying from, and also similar. We look at other similar properties in that area. How much are they kind of charging a month for the rental, right? So we can project that by looking at the information or the data which is already available there, on the deeds office. We are able to access that data, right? And compare in terms of also what are your potential operational costs, because your operational costs, obviously, minus the rental income per month, will tell you how much you're actually left with in terms of maybe the potential profit you could make, taking into consideration the servicing of the loan per month, right? I think maybe what you want to do is to first hit a break-even point where maybe you're just not making any money, you're just able to service the debt. I think that's better to break it even than to make a loss, where you are, you're servicing the debt. Maybe there's also operational costs, like if you're buying equipment, there's a lot of maintenance, plumbing, electricity. If you are the landlord, it's your duty to fix such. Or maybe you could have in the contract to say that maybe the tenant can maybe take care of some of the expenses. But what I'm trying to tell you is that when you're buying a commercial building, it will not be like, I'm buying this property because I like it. You're buying this property because you have done your research and you have done the calculations of the the expected income that you can get from there. So yeah, to answer your question, that the process is different.
Okay, thank you so much.
Yeah. You're welcome.
Okay, Hazel, do you still want to ask the question?
The question I initially wanted to ask was the same question as my boss. So she and I are best friends. So she's went ahead, I guess. Another question that I have is when it comes to buying on personal reasons, not to do business or anything, just purchasing just like a house for myself. Would you recommend, considering that I'm overseas and I don't see myself going back in South Africa anytime soon, I just want a place where, okay, let me not dive deep in that. But yeah, I just want a place that's going to be mine, say, okay, this is my place. Maybe I can get like a friend or family to like keep an eye on the house when I'm away. So I've just been sorry, what's the word? Okay, it's fine. Let me move on from that. The question that I wanted to ask was that would it be better to buy a freestanding house, or would you recommend buying an actual apartment? And also considering the levies as well, right? And the fact that, which obviously I'm not in the country. I'm not going to be living there full time, but I'm just going to be there from time to time. So, what do you think is based on this scenario? A house, obviously, if you buy a freestanding house, is going to be a little bit higher. But then also the apartment also comes with, maintenance fees, especially the levies, because they're quite costly if you want like a decent place, So what will you do on that? In that
No,
case?
I think Hazel, you're asking deep questions, right? And you're asking questions that are supposed to be there in the consultation, right?
Growing up.
Yeah, in the actual consultation, and I think that you should book a consultation already to answer some of these questions. But I mean, it's a good question. Just kidding with that. It's a very good question, and I think that, remember, let me just go back to the slide. Okay, we said that our first approach is to have the purchaser consultation, where we speak about the right property type for you. And Hazel, what you're talking about is a property type. We have freestanding houses, right? Where you have your own yard and your own fence, right? And you are free to do anything in that house. If you want to demolish this wall and rebuild it or whatever, obviously you'd have to get the plans approved by the municipality. But I'm just trying to tell you that if you have a freestanding, there's no one who's literally maybe restricting you and say, no, you cannot paint this wall. Because if you're in an estate, right, there are rules there. You cannot just start to paint your house in a color that you just like. There's rules there. All right, but to answer your question, right, it will really depend, right, and you really need to look at this very closely, so right, and it really comes down to costs, right. So you have levies which are paid to the body corporate of a complex or an estate because they're actually offering you services which you are benefiting from, and they are all great services, right? I mean, look at the security, you look at the garden that is being maintained. Maybe there's also like a clubhouse there where you can go and buy. That is all those are all your services that your levies are actually paying for. And mostly importantly, the security, if you're staying in a estate which is like the security patrolling every now and then at the gate, there's securities. I mean, if you're in South Africa, you know your country. So you want to stay in a place where at night you can have a peaceful sleep without worrying about anything. So we could look at levies sometimes. I thought about this and long ago, and I looked at levies and I was like, are levies really worth it to pay for, right? But I think they're really worth it to pay for. If you are in South Africa, they're really, really worth it to pay for, because if you can start to make quotations right now in terms of how much security companies they cost. I'm just throwing this in so that you can think about it, right? How much is a security company costs, right? If you are having a freestanding house, you have to get your own security company and install cameras and have alarm, and all of this is going to cost you to install, but not to install only, but to maintain, So I'm just throwing all of this so that you can think about it, right? If you are in China, you are working overseas, I would always say buy in a complex. That's my answer there, Hazel.
Okay.
Yeah.
Okay. Got it. Thank you.
Got it. Thanks. Anyone else? Maybe Carol can help us there. Yeah.
Yeah, BK, we can take maybe two more questions. Mawontle, I think she had a hand up first. So
Yes.
I won't say yes.
Yeah. Just to I just picked up something from Hazel's question, right? So sometimes it's a bit difficult to decide on what type of property you need to go for, because on my side, I've heard that there's some properties or some places, whether if you're buying from a complex, where you end up buying a certain property or an apartment, but that ends up depreciating due to the issues that happen in that complex, right? So my question is there a way where you are able to determine if that certain property or area, or you're able to predict if in the near future, when you look at other things that are surrounding that area, will affect its value?
Yeah, that's a good question, right? And it goes back to the purchaser consultation. The first step that we take, right? We talk about all of this, the right property type and the location, right? Which is location is very, very important when you're dealing with property, because where your property is, right, will determine the value of your property. Let's take just for example, right? And there are other people who have, I would call them, they over invest in a property. You can build a 20, maybe a 20-room mansion in a very bad location. Doesn't mean that the bank say that your house is worth it's worth 5 million rand. No. But you could find just a simple 2-bedroom or even a 3-bedroom, which is located in a, I would say, in an upmarket premium location. That bedroom, that 2-bedroom, it could be 18 million rand, right? For example, we know the richest square mile in Africa, according to what I've read, it's in Sandton, right? There are apartments, just a simple apartment that you can just find there in Sandton. Or if you look at other places like Stain City, which is just here by 4 ways in Sandton, properties there, they're really expensive, and it's because of the area, right? So to answer your question, the location is very important, but yes, we are able to kind of predict that by looking at what's happening in that surrounding, right? For example, there are some complexes where they are built, right? But when you look next to the complex, there's an open space, and it's a very big open space. If there's an open space like that, there's a potential of people occupying that land and start building a shack next to your apartment. And you could now imagine if someone started to build a shack next to your house, even if your house was 5 million rand, it could end up being, 200,000. I'm kidding though, but I'm just giving like some kind of, an example in terms of what could happen. So you want to avoid such places, right? But there are those premium locations where we are sure here the value of the value of the properties here have been, growing for the past, I would say maybe for the past 10 years or the past 20 years, they've been growing without losing value. Yeah. So there are those good locations we can point you to.
Okay, so when it comes to those, let's say a particular area where there's like building a new complex, for example, right? Is it possible to reach out maybe to a town planner who is able to tell that, okay, this place is about to gain more value because there's going to be schools, malls built around this area, even though those things are non-existent as yet?
Yeah, no, I mean that's possible to get the future plans, like the town planners who are maybe dealing with that particular area. Yes, it's possible. And firstly, if it's a new development, that information it should be available from the developer themselves in terms of what are they planning, and also what do they foresee happening around where they are building. So they have already that kind of information. Yes. So I think the answer is yes.
Okay, thank you.
Yeah. You're welcome. Grabo, any other question we have missed on the chat or anywhere else? Yeah.
I'm not seeing anything new unless somebody has a question. Yeah, but I think let's see. Yeah, I think I think we're good. We're good for now.
Yeah. Okay, no, that's great. That's great.
Yeah. No, man, thank you so much, BK. Thank you so much for your time. And we'll just leave your details so that anybody wants to contact you can just get hold of you.
Karabo.
Oh, yes.
More questions. Sipesita is like, I once heard that you can buy property in installments on Facebook. Is there such a thing? And then Luhumo is asking, what are the tips to paying off property faster? Would you advise that one should either make extra monthly payments or a lump sum?
Oh, yeah, no, I think those are two good questions. The first question, can you buy a property in installment? Remember, what initiates the property transaction? It's the OTP. And the OTP is the sale agreement, right? And it will have all the terms and conditions there, right? And then the seller and the buyer can negotiate the terms and conditions of the sale of the sale, right? Including how is the purchase price going to be paid, right? We know the normal 2 ways, right? And this one is also possible. So it is possible if the seller can agree to the fact that you can pay monthly, as Hazel said, it's called rent to own. That is possible, right? But remember, there might be a suspensive condition there, right? To say that I'm imagining this, to say that, for example, maybe you're not going to become the owner of the property until you finish it off. Obviously, I wouldn't allow that as the seller to give you ownership of the property until you've paid me the full purchase price. Because yeah, it's a bit, how do I secure my investment as the seller? It might be a very challenging thing. Yeah, and the fact that, probably if you die before you finish the property, paying off for the property, it might not even become part of your estate, meaning that your children might not be able to inherit this. So that's one of the risks that you have to look at. And also another thing on the sale agreement. So the sale agreement is going to be what's important. It's going to have to deal with things like, does the seller have the right to actually cancel the contract for whatever reason, right? So obviously there are conditions that can be put into the contract to say that if one of the parties breaches the terms of this the contract, what happens? Can the seller cancel? If the seller can cancel, right, you can see that your investment is kind of at risk as well. And it has to also talk about, are they going to refund you some of the money, and how are they going to refund you some of the money? So those are some of the things that they need to be considered. But it's very possible. It's just all about agreement between the seller and the buyer, and it's put on writing and it's signed. Yeah. Yeah. Oh, there's a second question here. Would you recommend to pay off your property faster? Either make extra monthly income. It really depends on you as well. How much money do you have, right? If you think you have enough to pay a lump sum because you want to pay it off, then I think that it's something that you can do, right? And it also, I think it depends on what your purpose is, right? If you maybe pay, I think that if you pay maybe an extra amount, that is something that I would suggest, because when you pay an extra amount, your monthly installment goes down, and also you're going to save from the interests that the bank could have charged you, because obviously if you're paying extra amount, even the term of the bond, which is normally 20 years, is going to be reduced depending on how much you put in there. Yeah. Yeah, but obviously, I mean, when you look at the one lump sum, if you're someone who's business minded and you like investing and putting your money to get more money, I mean, you might want to use your money for more investment and just continue with an extra monthly payment. It really depends on how you want to structure your life and what's your purpose when it comes to your finances and also business. Yeah. Yeah, so that's the answer. I'm not sure. There's follow up some questions. Who are we taking here, Karabo? Sorry, I was not looking who raised their head first.
Let's try Lehumo, because I don't think this person has asked before. So I know Itu has. So let's try Lehumo, and then we'll give it to Itu after.
Okay. Yes, Lehumo, go ahead.
Okay, thanks. Hello.
Hi.
I just wanted to ask, I had typed the question, but I see nobody picked it up.
Yeah.
Would you advise a person who has paid their property and finished, would you advise them to request their title deed from the bank and keep it on themselves, or leave the bank to hold the deed? Is it safe to actually say the bank can keep the title deed themselves? Yeah. Or is it a risk?
No, it's not okay. It's not okay. I think it might not be a risk, right? But I think it's not okay, because the reason why the bank keeps your title deed is because you have not finished paying off the bond that you took from them, right? So they're keeping it, and they actually keep the original. You can only have the copy. Once you finish the bond, you must take your title deed, keep your own title deed. And the title deed is very important because it's the only document. It cannot be duplicated or saying, I'm going to make a copy. If you need a copy of that, actually, they can only get one original title deed. Once you lose that, you can only get copies afterwards. And the copies, you get them at the deeds office. And there's a whole application, and there's a fee as well. So you want to keep your title deed because you've paid off the bond, and it gets you ready to do whatever, because the property is yours. You might want to sell it. You might want to do whatever. You might want to even maybe, link your property with your will, or you might want to maybe put some conditions on the title deed. Remember, the title deed has some conditions on it. You will see if you have bought property or you're going to buy property, you will see that the title deed has conditions, right? And the next person who buys the house, most of the time they have to adhere to those conditions that you have put in there as well. So keep your title deed if you have done paying for the bond.
Okay, I'm sorry. I wanted to follow up on that. I once heard that it is advisable to leave your bond account open.
Yeah.
And I'm not really sure what that. They said it's advantageous.
Yeah.
To keep it open, but I'm not sure.
Yeah.
How does it play for me? How does it make it advantageous?
Yeah, I think that's one of the questions that you should ask in the consultation, and I hope that you're going to be booking a consultation. We'll be delving deeper into that, but let me give you an answer. So I think that if you are in the business of property or you're planning to buy more properties, right, I would say keep your bond account open, right? So the advantage of that is that, for example, someone mentioned the paying of extra amount into your bond, which is good, right? But also, what's going to happen is that you can request the bank to actually open what we call a prepaid, but I'm going to find the other word for it. It's a prepaid account. It's like some sort of a check account, which is under your bond, right? Where all the extra payments that you have made, they normally sits on that account, right? And on that money that sits on I would say maybe it's a pocket, right, under the bond account. That money, you can decide what you want to do with it in the future. You can tell the bank to put the money that is on the side, on the pocket, into your home loan, or you can always transfer that money into your check account, right? So, for example, if you keep your bond account open after paying off the bond, you can still continue to use that pocket account as if it's like some sort of a check account, right? And it really helps you when you want to refinance or finance another property, because already you have an account. It's going to be simply for the bank to actually give another approval because you have a good history, right? You've paid off your bond, and here's an account is still open, and probably it has like maybe some money on the pocket. It really looks good with the bank. If you have some money lying around there in the old home loan account, it shows that you are ready now to buy a new property again. So I would say that's the advantage. Yeah, I'm not sure if you answered there.
You.
Yeah.
Yes,
Thank you.
Thank you.
Okay, all right. Thank you for your question. Anyone else, Karabo, who are we taking?
Itu can go.
Bye, Danki. I just wanted to add on to Luhumo's question when she was asking tips of paying the last time when we had a meeting. Daniel spoke about, and correct me if I'm wrong, BK. Daniel spoke about like if your house is like, for example, 950, and you know that you are very bad with cash, you can pay that man. I forgot what he called that term, where you can put the money towards the house, and then it then lowers your premium. Karabo, do you remember?
I'm trying to remember as you're speaking now, but I do get what you're saying. What is this thing called again? It's like a
capitalization. It's capitalization.
Yeah. So
something like that.
I forgot what he said the name was, what it's called. So you could do that, like put money into that, and like what Ubike was saying, that what happens if you are business minded and you want to use that money for something else. He indicated that you can call the bank and said, I've paid an extra 50K towards that, and I need that money for something else because life happens. And then you can get access to that money. But then I don't remember, Karabo, if that now takes back your premium back to 950 or does it stay at 900? So I don't know if I'm making the problem bigger or did I
No, you're
help
not.
in some way?
You're not. Yeah, and it's good because we need to do a differentiation here in terms of how the accounts are structured, right? So we have the home loan account or the bond account, right, which you have taken from the bank, right? That's the main account that you have taken with the bank, right? And when your debit order goes off, that's where the debit order goes into your home loan account, right? And then on the second part, right, you can request the bank to open some sort of I call it a pocket under the home loan account. And I think some other banks really call it a prepaid, whatever they call it, but it functions the same way, right? It's kind of a pocket or a sub account under the home loan account where when you are paying extra into the home loan account, the extra amounts they sit on the pocket, right? And when they sit on the pocket, they don't go directly to the home loan account. That's when you say you can now decide what to do with the money. As long as the money is sitting on the pocket, it's still yours, right? It's not with the bank. It's not the bank's money. It's your money. That's why you can withdraw it whenever you want, right? You can actually make a transfer via your banking app from the prepaid account, which is the pocket, into your check account to use it for grocery. I'm just making an example for whatever you want, right? But then once you do what we call a capitalization, meaning you are telling the bank to say, I have 200,000 sitting on my pocket, but take that 200,000 and put it on my home loan. You cannot get it back. It's already on the home loan. It has already calculated your interest. The money has already been taken by interest. It has already serviced the bond. You cannot take it back. So the decision that you have to make, it's when the money is still sitting on the pocket. Do you want to withdraw it or do you want to capitalize it? When we say capitalize, you're paying it into your home loan account. Yeah, so that's the difference. Yeah.
Thank you.
You're welcome.
Okay. We have Barbara. Hi, Barbara.
Hi. My question is, if you are interested in investing in property and you keep buying more property, and you're not buying it cash and you're relying on the bank to give you a home loan, home loans are limited to your affordability. So if it gets to a point where now you've reached your income affordability limit, so meaning that what you can show that you can repay if anything were to happen is now more than what you are wanting to buy. For instance, you want to add on another property. How then do you go about with the banks basically to say that, okay, I do have 2 properties, for example, but my income is limited to this affordability amount, but you want to buy an extra property?
Yeah. So I think that question should be answered in this way, right? Number one, you want to buy more properties, right? And but the affordability is not allowing you. If the affordability is not allowing you, then the bank will also not give you money, right? So it means that now it comes back to why are you buying these properties, right? And that reason will also will enable you again to actually qualify for more finance, because I believe that if you buy more properties, you might be buying them to actually make money through them, which is rental income. And that rental income can be or should be considered by the bank as part of your income if you're already making money, whether it's via Airbnb or you have just like long-term monthly income. That rent is coming into a bank account and it should be your bank account. Then you can prove that via this bank account that there's money coming in from all these properties, and then I want to use this source of income to actually finance my next property. The bank can consider that. Or if they want, they can request more documents from you. But yes, that's how you refinance a property.
But isn't it that they look at, for example, yes, you're saying you have tenants and you're getting rental income, but the basically the way that the bank will secure themselves is that if you did stop having a tenant, would you then be able to pay it back? So if the answer to that is no, then doesn't that limit your chances of getting the finances?
it may, the answer is that it may, right? And obviously it would depend on many things. Is this the property where you're getting income, how long maybe has it been operating? The bank will also look at that. If you can, provide, maybe it's either financial statements or just bank statements where you could prove that at least the property has been generating income for a longer time, that it gives you a bit of credibility to say that this person may be able to actually cope, even if they don't have a tenant for maybe a few months, but they will bounce back because they've been in the business for some time. So the bank will obviously, consider everything holistically, whether to give you the finance or not. Yeah, but to keep record, especially if you're in the rental income, keep record of all the rent coming in, the statements. If you can get an accountant which can compile for you appropriate financial statements, that will be even great, because now the data is really presented in a very concise way, in a straight way.
Yeah, sorry, Barbara, we're gonna have to end the call, with respect to time, because shame. BK's been here for a while, so anybody who wants to do a follow up, please get hold of him. And just reach out to him and just do a one-on-one if that's okay.
Yeah.
Recording stopped.
BK, you forgot to share your info in the comments. I don't know if everybody was able to take a screenshot while you displayed it on your shared screen. Can you just reshare that in the comments as well?
Yeah,
or share your screen again with the details.
He'll just also send it to us, and then we'll just
perfect.
Yeah,
Okay.
throw it in. Oh yeah.
Oh, throw it in the group. Okay, no, that's fine. That's fine. That's also fine. Thank you so much.
Okay. No, thank you so much, man, BK. We really, really appreciate your time. It's been a minute, but we really appreciate your patience as well. Dealing with all the questions, and we really appreciate it. That's it from our side.
Thank you so much for having me as well. Yeah.
All right. Thank you, everyone. Thank you, Itu. Thank you, Hazel. Thank you, everyone, for being here. And one last thing I wanted to just add on, for people trying to build their credit, you don't have to always go too formal. Like I said, when you go back home, just print your 6-month bank statement and tell them that you're self-employed. Don't mention the China part, and then basically they'll see the money in your account, and then you can just tell them okay, I do some informal trading in a way. That's how I got my foot in the door. And then once you get that small phone or whatever you wanna purchase for the time to build your credit, and then you are in. So yeah. Anyway, that's all from my side. But thank you so much, everyone. Have a good week, and we'll see y'all in the group.
Thank you.
Thank you.
Bye.
Bye. Thank you.
Bye.
Thank you. Bye.